Well, good afternoon, everyone, and welcome to another PBALC informational live stream brought to you by our friends at Frost Bank. Thank you, as always, to Frost Bank for sponsoring our 2024 informational live streams. As many of you may or may not know, April is National Financial Literacy Month. So, of course, our focus for this month is going to be financial literacy. So today we welcome Adrian Acosta with Frost Bank to discuss financial literacy. Welcome, Adrian. We are so happy to have you today.
Thank you. Thank you for having me.
Well, start off by telling our viewers about yourself and your role there at Frost Bank.
My name is Adrian Acosta. I've been with Frost Bank for 12 years now. My role is I am a commercial lender. My official title is I'm a relationship manager. So what I do is I provide commercial loans to businesses here in Midland, Odessa, and also help manage their deposit accounts and just provide financial advice for them.
Wonderful. Well, can you, since we are talking about financial literacy, can you tell our viewers why financial literacy is important, why we should focus on it? Because I feel like, there's health literacy, there's, of course, uh, uh, English literacy, reading and writing literacy, but sometimes financial literacy is dismissed because not many people are motivated to make changes until there's negative consequences, until they're in a lot of debt or something like that. So why can you tell our viewers why we should pay more attention to financial literacy?
It's important because it's part of our daily life, right? And money is important, and it helps us, get through our day, get through our months, our time here, and it's important to save. It's important to understand how money works, how credit works. To understand what banks can do for individuals, for businesses, and not just banks. There's other financial institutions. So understanding how all that works and why it's important to save and manage your money correctly, it can help you a lot, in the short term and the long term. So it is very important for everybody to have some financial literacy.
Yeah. Money, without money or funds, it's, money and funds are essential part of your life, right? And so if you have a knowledge of how to manage your money correctly, you can make better informed decisions about your life and have more stability, I think,
Yes,
in your life.
correct.
So there's a lot of talk about the 3 C's in financial literacy. There's character, capital, or collateral, if you want to call it another term for capital, and capacity. Can you talk a little bit about those 3 C's?
Yeah. So say them again. It's character, right?
Character, capital or collateral,
Yeah,
and capacity. So the
and
three
capacity.
C's of credit, basically.
Okay, yeah. So character is very important, and in my role, it's something that I look at a lot, right? Because I lend customers money, right, to grow their
Mhm.
business, to working capital, to help them on their short-term needs. So character is very important because it determines it helps me determine if this customer is going to pay me back, right? Are they going to
Be
do what they
responsible.
be responsible, yes, ma'am, do what they have to do to pay back their debt, to take care of their business. So character is very important, right? If somebody shows us a bad character, shows us an unwillingness to repay their debt or take care of their responsibilities, and then that, that's a negative. We view that negatively, and they may not be approved for any type of debt with us. Capital is very important. Capital is It's just something that I tell my customers all the time. You need capital, right? And there's that saying that cash is king. And
Mm-hmm.
so for us, we like to see capital. We like to see that our customers are saving their money, that they're growing their balance sheet, and primarily through liquid assets. And so, because what that does is when you grow your capital, when you're saving money, it helps you in the event. when there's a downturn, which we know there's always going to be when it's just inevitable. There's the economy goes up and it comes down, and so
Mhm.
we want to see capital in our customers to help them on those rainy days when it's not looking good, to help them survive and continue. And that's on the commercial side, and that also helps you on the individual side as well, right? Um,
Right.
and then the last one was, I'm sorry again,
Capacity.
cap- capacity.
Capacity. Mhm.
So I'm gonna take the capacity as like your ability to repay debt, or your ability to have financial capacity.
Yep.
That's a term we use quite a bit here at the bank. Financial capacity is just your ability to create cash flow, to create cash, to turn,
Mhm.
assets or products into cash. And so you want to have capacity to continue to make, the cash flow, to continue to save, and having capacity is also part of managing your budget and managing what you spend on, what you buy, knowing how much is coming in, and knowing how much you can use for expenses and how much you can save. So
Yeah.
I hope
And
that makes
so,
sense.
and I don't think people think about those three C's, especially the character part, right? Whenever they're going to maybe get a loan, either personal or work related. You got to think about those three C's
Yes.
when you're uh, going to present yourself to a financial institution to hopefully get some funding.
Yes.
So it's important to think about those things. And um, what is why? How do you think people can best manage their money?
So I think that the first thing, uh, and the most important thing, is creating a budget, right? Is
Hmm.
creating some sort of budget so that you understand how much money is coming in, whether it's weekly, monthly, semi-monthly, however many times you get paid, or you see your income come in. Creating a budget and understanding how much comes in and how much I need to pay out, right? And so that is very important because it helps you see where your money is going and how much money you're saving every week, every month, every day, however you want to look at it. Um, so that to me is very important, is understanding how your money is working, and how your money is being utilized. Uh, second thing I would say is, once you create that budget, is to create an amount, establish a savings amount, right? And want to probably save that first, and then whatever you have left over pays your necessities, pays your bills, pays your groceries, whatever you need, and then what's left over takes care of you having some fun, some additional purchases, some wants, right?
Hmm.
So the saying is, save first, spend later, right? And of
Hmm.
course, you don't want to, if you're making, you don't want to go and save 90% of your income up front and not have enough to pay your bills, right? You
Yeah.
want to set a reasonable goal that you can to save, and do that first before you go and start paying for everything. And then the last bit of it is, you can have fun with that, and do whatever you need to. If you want to take a trip, or buy some item that you want or something like that, but you take care of your business first by saving and taking your bills. Set financial goals. That's very important, right? And financial goals can be anywhere from paying down debt, from saving money for college, from saving money to make an investment or make a purchase in the future. Set financial goals. And then what's also very important, and what a lot of financial advisors will tell you, is save early. Save or invest early, because the earlier you start, the more you're going to have in the long run, especially if you're investing into some sort of portfolio of marketable securities, some investments. The earlier you start putting money in there, the more time that you have for it to grow, right? And so in the long run, it helps you out. And then the last thing is just avoid debt. And as a banker, I can't really tell you to avoid debt completely, because there are levels to debt, which is good, and I know we'll go over that here in a bit. But you definitely want to avoid unnecessary debt or too much debt, right? You don't
Hmm.
want to go and just start buying things just because you might have credit, and credit cards are probably the worst ones. Um,
Mhm.
they're so easy to obtain, but they're also so easy to use and run up your debt, and they get pretty expensive. So,
Mhm.
avoiding unnecessary debt or too much debt is very important to help manage your money.
And so, what do you recommend to somebody that says, "Okay, I know you're telling me that I need to create a budget, but it's overwhelming from them to like I don't know where to start."
Yeah, so there's a
Well,
lot of resources. I mean, nowadays with Google and online, there's a lot of resources. There used to be some pretty good apps and software that you could purchase, or not even purchase; they were for free. I personally used to use an app that was called Mint, and it would help you budget. It would show you your spending and your income coming in. It would also track your net worth and all that. Unfortunately, Mint is no longer available. It's shut down. But there's also similar apps to that. Also, just getting with a financial advisor, right? And I'm a banker on the commercial side, but there's plenty of financial advisors out there that can help you manage your money, that can help you invest, help you save. And so there's always even local CPAs. If you have somebody that does your tax returns and all that, they can give you
mhm.
some advice. But there's always resources out there, especially online or here locally in person, that can help you manage your money.
And if you can't afford, a CPA or a financial advisor, there's always Excel if you know how to use Excel,
Of
or
course,
like
yeah.
you said, those apps. There's plenty of apps. I get budgeting apps available out there for free, and then just a simple paper. Just
Yeah.
write down uh, your income and then your expenses on one sheet, and it could
Yes.
be as simple as that.
Yes.
And if you have a relationship with your banker, I'm sure they will help you out as well too.
Yes.
um, so where are the best how what are the best ways to save money? Because I know you emphasize the importance of saving money. So what are the best ways for people to save money?
Uh, the easiest way is probably the banks, right?
Hmm.
Putting some money into a banking account, whether it's a checking or a savings, primarily if you're trying to save and you don't need the money in the short term or in the immediate term. Putting it into a savings account would be the easiest way to go. We don't want to just put it in a safe at home or under our mattress, and
Yeah.
because it's not earning anything there. So you want to put it in something that's earning money for you, that's working for you, and even if it's just a little bit goes a long way.
Hmm.
And so banks are usually where you start. Banks, credit unions, those types of places to start a savings account. And then you can get into, as you start to grow, you can start looking at wealth advisors, your financial institutions like that, your financial advisors that can help you get into other type of investments like stocks and bonds and stuff like that.
Hmm.
That's a good way to grow. Um, and so, yeah, that's, to me, those are probably two of the best ways to save money. But initially, to start is putting it into a bank account, primarily savings.
And so for those that don't understand what credit is, can you tell our viewers what is credit?
So the credit is the ability to borrow money under some sort of agreement that you're going to repay that money back in the future, right? And that's what credit is. So when I extend credit to a customer, right, I'm giving him funds to make a purchase or to utilize for his business, with the agreement that he's going to pay me back over time, whether it be over a year, two, three, four, five, depending on the type of deal that it is, right? And so that's what's credit. And so credit is very important. And on the individual side, when you obtain credit, it goes on to what we call the credit report, right? And
Mm-hmm.
so showing having the ability to make those payments and showing the willingness to make those payments and take care of your debt is important, because there is a report that is kept that shows bankers and other institutions how well you are about managing your credit, right? And so that's what credit is, and it's a very important part of our life, and of of our ability to continue to grow our personal life and business as well.
Mm-hmm. And so now we're on the topic of debt. Why is it important not to incur debt if at all possible, or to avoid debt as if at all possible?
So, like I said earlier, as a banker, I think bank debt can be good in certain situations, and I can give you some of those examples. But in the first answer your question, uh, if you incur too much debt, and what I said earlier about unnecessary debt, it makes
Mm-hmm.
it harder for you to continue budgeting, right? To continue taking making sure that you save, right? If you start to buy all kinds of items and you start to buy them on credit, and you may think, well, yeah, I can pay it over time. Well, now that income that you're making is going solely to pay debt. And when you run into an issue where maybe times aren't good, maybe we have a downturn, and if you don't have any type of savings, now that debt has accumulated, and those creditors are not going to stop calling, right? They're going to keep coming
Mm-hmm.
for their money, and you have to continue making payments. So when you have too much debt and you don't have the capacity to continue to pay that debt, then it causes issues with your credit, it causes issues with your financial institution, and that can just create a lot of issues in the long term, right? And so you want to try to avoid, sorry, my lights turn off if I sit still for too long. um, you want to try to avoid accumulating too much debt, because in the long term it could hurt you if something happens, right?
Mm-hmm.
Now I will say there's some debt that is healthy for you, and the biggest example is buying a home, right? And so most people, a lot of people maybe not don't have the cash to go in and just buy a house outright, right? So you have to
Mm-hmm.
obtain a loan to buy a mortgage, to buy a property, and you have to get a mortgage. And so that's to me that's healthy debt, right? Um, because you're investing in yourself by buying a piece of real estate, right? And the real estate has value. And as long as you continue to make your payment, even if something in the end happens, you could always sell that asset and pay your loan back. Now, I always tell people too, even if you have done really well and you have saved a lot of money, and say you're buying a house for $100,000 and you have $100,000 saved up, some people would say, well, I'm just going to buy my house in cash
Mm-hmm.
and not have a house payment or a mortgage. But what I always tell people is it's okay to obtain a mortgage even if you have the money to pay the house off. And what you do is you continue to save the money. You offset some of the interest you're paying by the interest that you're earning on your savings. And in the event of a downturn, you have that savings and you continue to make your payments on your mortgage while you recover from this downturn and you get back on your feet. Because the moment you run out of, if you would have used all liquidity and we went into a downturn tomorrow, it's going to be hard for you to continue. It's going to be hard for a bank to give you any type of credit. And so it's always good to have savings and also obtain some healthy debt like that. But yeah, staying away from credit cards. Credit cards serve their purpose, and they're good in some aspects, but it's pretty easy to get into really bad debt with credit cards, and those are, that's really the unnecessary debt sometimes that you want to stay away from. And especially if you want to use it in moderation, but try not to obtain 5, 6, 7 credit cards and then just have the habit of running them up all the time, and then you get stuck with some pretty high payments. And so yeah, so
And
you
the
just want
interest
to understand.
rates on most credit cards are horrendous. And so, if you're thinking, I only put $1,000 on a credit card. Well, no, if the interest rates on that credit card are or 20%, you actually owe 1,000. I don't know. I can't do math in my head very well, but you owe 1,000 plus that interest.
Yes, yeah,
So.
and no matter how good your credit is, you're not going to get a great rate on your credit cards, right? I mean, you could have perfect
Mhm.
credit, and credit cards are still going to charge you, 15 to 25% or 15 to 30% on it on that money. So yeah, they are expensive. They are, and so if you're going to use a credit card, there people use credit cards to earn rewards, to earn cash back, travel points. That's perfectly fine as well. If you're using it and paying it off every month. That's kind of the best way to do that so that you don't accrue that interest. If you pay off a
Mhm.
credit card, the statement balance every month, then you will not accrue any interest. But that falls back to you have to be disciplined and consistent with it and make sure that you are making that payment and you're not overspending.
Mhm.
So they can have some reward, some benefits to them, but if you're not disciplined and responsible with it, it can get out of hand and you can get into some trouble.
Mhm. And what are some recommendations that you give to? I know inflation is a there's a lot of talk about inflation right now,
Hmm.
inflation in the economy. What are some recommendations that you give to inflation proof your budget and your funds?
Yeah, so the I think one of the big things is just putting the money into a savings account that's kind of beating inflation, right? If your
Mhm.
inflation is 3%, then maybe trying to, and right now accounts do offer 4 to 5%, is trying to find those accounts that you're earning a little more than what prices are changing.
Mhm.
Um, and then I think that's what's also important, and going back to our budget, is managing your budget correct, or paying more attention to it, I guess, because
Mhm.
as what inflation does is it's increasing prices of our goods that we buy every day, right?
Mhm.
So you want to be able to go back and look at your budget and see, is there some fat that I can trim, right? Are there some expenses that I can go back and cut that maybe I don't need them. Maybe right now they're just a little bit of a luxury and it'll help
Mhm.
me save money. It'll help me cover my other costs that are going up, my necessities. And a lot of that, could be some of your entertainment. And some of, like, nowadays we're paying so much for Netflix
Yes.
and all of these streaming services, and maybe we start to cut some of those down to help us cover our groceries, to help us cover our light
Mhm.
bill, because we are seeing those prices go up. So I think that's really important, is just managing your money and understanding where it's going and where you're spending maybe a little too much, and that can help you cover other costs or save more money in high interest savings, stuff like that.
Yeah. And back to, what we talked about is if you're still overwhelmed about, how to set a budget, or, I don't know how to make really good informed financial decisions, reach out to your financial institution, and that comes back to having a relationship with a financial institution, because a lot of some of at PBALC, at our adult literacy center, we see a lot of immigrants or refugees where in their home countries, their financial institutions, they couldn't be trusted. But can you talk about a little bit about, you know forming a relationship with your financial institution, with your bank, with your bank officers, and knowing that financial institutions in the U.S. for the most part can be trusted.
Yes. Yeah. So uh, relationships are for Frost are very important. That's what we are.
Mhm.
That's our motto. We are a relationship bank. And it is very important for us on both the commercial and the consumer side. It is very important because we work in the financial industry. We see a lot of things, and so when somebody needs some advice, some guidance, we're here to help you. We can help you with just opening up savings accounts and telling you what can
Mhm.
help you grow your money. And so yeah, and I'm speaking on behalf of Frost, right? We have a huge group of individuals, of other departments, wealth advisors, insurance. We can, if
Mhm.
you have questions, we can easily call one of our colleagues or have them call you and give you some advice on that, help you on those products. But it's always good to establish relationship, to have somebody that you can call and ask a question to help you out if you need to. And
Mhm.
so, you know, I do know that there's probably are some institutions out there that aren't giving you a square deal, that aren't doing the right thing. But for the most part, I think banks can be trusted, and
Mhm.
especially to hold your deposits. Eh, but sometimes you do have to do a little research and make sure that it is a trustworthy bank, right? And
Mhm.
I know not too long ago we had those issues with those banks out of California, the Tech
Mhm.
First and all that. And so sometimes it's good to know where your money's going, and if you're not savvy, then just ask your banker, and I hope, and I'm pretty sure that they'll give you a straight answer, and that that they can tell you how strong the bank is and where your money is and what we're putting our money in. And so yeah, it's for the most part, financial institutions are a good place to seek advice and to put your money in.
Absolutely. And so, you know, remind our viewers to be able to don't dismiss financial literacy and know where your money's going, budget, because like I said at the beginning of this live stream, money without money and funds, there's not very many things you can do in life. So it's important to know um, where your money's going, where you're spending your money, and that you're making informed decisions about your finances.
Yes, yes.
So,
It's very important. Always to keep track of your money, to understand where it's going, to set
mhm,
financial goals, to be smart about it. There's an acronym out there about financial goals that says SMART, but
mhm,
when you set financial goals, make sure that it's a SMART goal, that
mhm,
it's measurable, achievable, that it's relevant, and that it's time based, right? And so you don't
mhm,
want to set goals that are too that aren't achievable. That if somebody sets a goal, I want to buy a Ferrari one day. Well, is that really achievable, right?
mhm.
In the current situation that you're in. So yeah, just setting goals and setting a budget and just keeping an eye on it and making sure you understand where your money's going and that it's not getting out of hand or getting and that you're not tracking it. So it's very important to understand how all that works and to help you out.
and and don't wait until there's negative consequences, right? Until you've
Yes.
incurred tons of credit card debt or made a poor decision on an investment or something like that. Start as the sooner the better that you start making
Yes.
making informed financial decisions about your life.
Yes.
um, well, any last thoughts that you would like to add, Adrian, about any resources that Frost Bank may have? And well, as always, we share the links on our comments after the live stream. So
Yeah, I don't have too much. Just if anybody ever has any questions or is looking for a bank, definitely come see Frost. But there's also other local banks in town and credit unions that would be glad to help anybody, that would be happy to get you going on establishing a budget or helping you with your savings. But yeah, if we have plenty of branches around town and all across the state of Texas. So if we're always happy to help somebody out. So if anybody needs any help, feel free to walk any one of our branches, and any one of our personal bankers there could always assist you and guide you in the right direction.
absolutely. Well, we want to thank you, Adrian, for joining us today. And we want to remind everyone that in the fall semester, PBALC will be offering a 6-class financial literacy workshop that's going to be facilitated by Frost Bank. So if any of you are interested, you can go to our website, www.pbalc.org, and we'll have more information about that. Or you can give us a call, 432-682-9693, so that we will be offering that class in the fall, and it's going to be facilitated by Frost Bank. So if you want more information, or if you're one of those that are like, oh, I'm overwhelmed by, I don't know how to set a budget, I don't understand investments, I don't understand savings, this will be the class for you. So make sure and be looking for that. Space is going to be limited, so be looking for that. And we're so thankful to Frost Bank for facilitating and partnering with us to offer that. And thank you again, Adrian, for joining us today and
Thank you.
informing our viewers a little bit about financial literacy education. And we will see everyone next time for the next informational PBALC live stream. Thank you, everyone. Have a great day.
Thank you for having me.